If you've invested in Solana over the past year, there's a very good chance you're still underwater, even though Solana is one of the most promising digital assets. That disconnect leaves most investors worried with the same question. Why? What actually drives value in blockchains? Because until you understand this, it's impossible to know whether Solana is mispriced or whether your expectations were just wrong. By the end of this, you'll exactly understand what actually drives value in blockchains and how Solana fits into that model. I'm Marcus Lutz and I've been investing in cryptocurrencies for over 5 years, consistently outperforming the market. And today I'm helping others do exactly the same through strategic crypto investing. Let's dive into the video. So today we're exactly covering what layer 1 blockchains are, what is the landscape of layer 1 blockchains, the Solana bull case, as well as the Solana bear case. You've probably heard the term blockchain. A blockchain is simply a chain of connected blocks which contain information of transactions, of holders, of whatever happened on that specific blockchain. And Solana is one of those blockchains, such as Tron, such as Ethereum, such as the Binance chain, Arbitrum. The key purpose of a blockchain is to store information securely so that no one can alter it retrospectively, but still being transparent so everyone can see it. And this exactly is what the chain of blocks is made of. Simply contained information that's stored in blocks together. A blockchain is also sort of an ecosystem where multiple apps can run on and can enhance the functionality of that blockchain ecosystem. So every blockchain out there will have some sort of DeFi, so decentralized finance application. We'll have stable coins running on it. We'll have an RWA, so basically real world assets app on it. We'll have an AI app on it, meme coins, as well as a layer 2 scalability solution. For Solana, for example, that would be Camino Finance for DeFi. We have RWA for Ondo, stable coins, USDC, USDT, many others, you name them. Meme coins, Fartcoin has been the strongest performer in 2025. We also have Bonk, for example. Layer 2 as a scalable solution, we have Jito on Solana. And basically now you understand what the blockchain is, and Solana is the name of the blockchain, but also has an equal name as a coin, which is the Solana coin, or short SOL. This is the transaction currency on the blockchain. So meaning if you want to transact on the blockchain, if you want to send money to somewhere, or if you want to participate in DeFi and lend your stable coins, for example, or lend your Solana, you have to pay with Solana to facilitate that transaction. Solana then is redistributed to validators who secure the authenticity of the blockchain. And in simple terms, this means if there's a lot of transactions on the blockchain, the demand for Solana increases as Solana is the transaction currency for that blockchain. So now that you've understood what the blockchain is, let's see what characteristics distinguish blockchains, so what you need to know to understand what value blockchains have. First of all, security, probably the most important. If a blockchain is not secure, nobody will use it. As simple as that. Transaction costs are key. Ethereum, for example, is a super secure platform. However, it has quite substantial transaction fees. So for everyday transactions, Ethereum is often not the wisest blockchain because the fees can definitely eat into your profits. Thirdly, the available apps and yield. So if there's nothing you can do on the blockchain except for sending and receiving money, chances are you're likely not going to use the blockchain much. The more apps you have, the bigger the ecosystem, the higher the chance that you will interact frequently on that blockchain. Additionally, speed is very important because if you can transact within seconds, it's highly likely that you're going to use the blockchain more. Here we can see some of the transactions per second. That is the main KPI that we look for speed in blockchains, and we can see Solana is ranked number 2. So it's a very, very fast blockchain. And lastly, there often is a focused niche for every single blockchain. And for Solana, for example, it's trading and DeFi activities because that requires a lot of transactions. So if the transaction costs are low and speed is high, that is ideal for a blockchain when it comes to trading and DeFi activities. For Ethereum, it's mostly RWA, so real world asset tokenization, such as real estate, and stablecoin yield and lending. And if you don't transact that often, trading fees don't matter as much, or transaction fees. And we have payments, for example, we have XRP. So now let's look at the blockchain market share first. The blockchain market share is measured by TVL, so total value locked by blockchain. And we can see Ethereum is the biggest one of them all, second only to Solana. Bitcoin is quite small because Bitcoin is mostly a store of value. And then we have the Binance chain and so on and so forth. And if we compare that to the valuation, it's quite interesting because it doesn't match up to the market share of the blockchains themselves. All blockchains in the end compete for market share, right? As a blockchain, you want transactions, you want total value locked to be increased. That unfortunately, or interestingly, doesn't go hand in hand with the actual valuation of that blockchain. So valuation meaning the price of the asset of Solana, for example, multiplied with the quantity of outstanding Solana in the whole world. And we can see Solana is ranked number 6 of all coins, number 4 of layer 1 coins, surprisingly behind BNB, the Binance blockchain, even though the market share is quite a bit higher on Solana versus the Binance chain. And that just goes to show that the market share alone doesn't really justify the valuation or the ranking. Of course, in the grand scheme of things, yes, but not specifically, in the exact order. So we can see the BNB chain is more than 50% higher valued than the Solana blockchain. So now let's take a quick look at the charts. All right, this is the Solana weekly chart. And we can see there's a lot of volatility. Back in 2021, we hit the $250 mark for the first time, and only to sell off over 90% down to $10 per Solana or per Sol. Then we had an incredible rally over 2023 and 2024, and then hit resistance in 2025. Since then, we're sort of ranging between the $120 and $130 level and the $250 level. So as an investor, you definitely want to avoid buying up here because Solana has proven to find resistance there and is likely going to sell off afterwards, as we can see in the past. We have had drawdowns of over 60%, right? So as a Solana investor, it's key to be aware of the price action and buy primarily during the major support levels around $120 to $130 and sell all the way up to $250 and then get out of your position for a massive, 100% return. That would be if you buy at the lows and sell at the highs. It's very key because Solana has huge price swings as an altcoin. And as an investor, you need to be aware of the support and resistance levels and align your buying and selling with those levels. All right, so now that we have looked at the charts, let's look at the fundamental side of it and the quick bull case versus bear case comparison. So for the bull case, Solana is a super fast and cheap blockchain, which makes it ideal for trading and DeFi activities, boosting its overall usage and transactions. This is perfect because this increases demand for Solana. We also have an ETF that was approved in August of 2025, and we have seen steady inflows overall, more than $500 million already that is sitting in these ETFs. Of course, those are small numbers compared to Bitcoin and Ethereum, but it does show institutional demand for Solana and institutional backing by just even having an ETF. We also have the second largest layer 1 blockchain, total value locked, with around 12 billion. That, however, is strongly fluctuating based on the prices on the market. We also have a very comprehensive ecosystem around DeFi, wallets, stablecoins, etc. This is something I said earlier. If there's no apps on the blockchain, what are you going to use the blockchain for? So having a strong, massive ecosystem in Solana is critical for its growth in the future. Lastly, we also have favorable US regulation. And this basically was something that was introduced in 2025, which is the US Clarity and Genius Act. And specifically, the Clarity Act is very interesting because the Clarity Act basically focuses on non-native tokens as securities. As a crypto token, you don't want to be classified as a security because that gives you all sorts of oversight regulations from the SEC and so on and so forth, which makes it much more difficult to grow and to be in line with the regulation. So basically what this act is looking to define a digital commodity, which is basically a blockchain system, which is defined as a distributed ledger technology with open source and automated distribution. This is fancy English for the exact definition of what a blockchain is. Basically distributed ledger technology with open source code and automated distribution, basically reallocation of emissions and fees within the Solana network from the transaction wallet to the validators. All of this basically means there's increased demand for layer 1 tokens and also paved the way, one could say, for the ETF. Now, however, we also have to consider the Solana bear case. The problem with Solana is that the free revenue alone doesn't justify its valuation. As I said, the transactions are super cheap, so you really don't need a lot of Solana to actually pay for the transactions themselves. And this is completely opposite to other blockchains like Ethereum, on which transactions are quite costly. Next, we have a relatively high coin inflation, around 4.5% in 2026. Over the long term, this is going to reduce to only 1.5%. However, at the moment, the mathematics behind the emission schedule are pointing towards, a 4 to 5% emission rate and hence inflation rate in 2026, which is relatively high. And this is something you have to consider as an investor. Next, the high usage doesn't mean a high holding demand, right? As we said, high usage of the blockchain isn't necessarily the value driver for many blockchains which have very cheap transactions, such as Solana. So high holding demand is what you need in order to drive value on cheaper blockchains like Solana. This is what we can see here, where we can see the Solana market cap and the chain fees layered on top of each other, where we can see a spike, towards Q4 of 2024 and Q1 of 2025, where we had very, very high fees and also a high market cap. However, the all-time high market cap was then reached mid of 2025, where we have almost no spike in fees, meaning the high usage and hence the fee generation doesn't necessarily align with the market value. And therefore, we need other sources for valuation, and that is really staking, DeFi collateral, and speculative holding, because all of these three mean that more wallets hold Solana for a longer period of time and basically decreasing the selling pressure and increasing the buying pressure. And those are really alternative sources for value creation and supply scarcity. And they are more fluctuating because DeFi conditions can change quickly if a new chain comes around the block and offers really great yields, etc. And speculative holding depends on the market sentiment. That's why Solana seems to be a quite volatile asset, always ranging between $250 and $120, which is a 50% drawdown from the highs or 100% gains from the lows. So, that just shows Solana as a super volatile asset. The other negative is that we have seen some historical outages, which is terrible for a blockchain to have. However, in the recent history, in 2025, 2024, there has not been a single outage in the Solana network, which is great to see and just boosts the stability of the network. And basically, with all of that in mind, you have seen that Solana is definitely a very volatile asset, but has a lot of benefits in opposite to some drawbacks that we have to consider as well. In my personal opinion, Solana is a very, very good layer 1 asset to hold for the long term because regulation enabled the pathway to more usage on blockchains and more RWA, more transactions, etc. And Solana, in my opinion, is going to be a big benefactor of that. Also considering the ETF inflows, which have steadily risen, I do think that Solana is generally a very good investment when it comes to cryptocurrencies. However, as investors, you need to closely watch the price action and especially look between the $120 and $250 levels. Whenever it reaches those extremes, definitely trigger buy or sell decisions within your portfolio to protect yourself against downside and capture gains, because that is something that Solana is really notorious for reversing quickly in both the upside or the downside. With that said, I hope you took some value from it. Please subscribe to the channel because most of you are not subscribed yet. And thanks for watching. See you in the next one. Cheers.